Hi, Jim Gore from Thor Wealth Management. We're starting to see a sea change in the market that we think is going to continue for many years ahead. And that is international stocks are starting to outperform US stocks in a very meaningful way. Here's a chart just going back a few days ago, back to May 22nd. And the orange line is the SPY, which is the S&P 500. The blue line is the emerging markets ETF, and the red line is the developed EFA markets. And you can see that they have outperformed. What's interesting is that emerging markets were pretty even with the US stocks until only about 5 days ago. And you can see that that's been a significant change in performance. We think that's going to continue in the future. And one of the things that's going to cause those stocks to appreciate is the money supply is growing very rapidly in emerging markets, especially in China. You can see it spiked up here at the end of this graph, and we're starting to see acceleration of the money supply. Last time we saw acceleration of the money supply in China was going into 2009 for many years up until that point. And that's also a time period that emerging markets significantly outperformed US stocks. At the end of 2009, all you could hear was the US was the worst place to be, and you got to invest in the BRICS: Brazil, Russia, India, and China. And they underperformed the last 10 years, and part of that could have been the deceleration of the money supply growth in China. The acceleration of that right now is very good signs for emerging markets. But more importantly, there's four fundamental reasons why emerging markets should outperform the US stocks for the next several years. We think probably for the next 5 to 7, maybe even 10 years. First, they're selling at much cheaper price levels. In some instances, it's a quarter to one-third of the price of US counterparts. Secondly, their dividend yield is higher than the US. Third, they have a younger workforce than the US. And fourth, they don't have the built-in liabilities that we have in the US, such as Social Security, Medicare, and these federal pension plans that still are unfunded. That's going to weigh on our ability to outperform and grow our GDP in the future. So if you have a lot of US large company stocks, this is a time that you better put some of that money, move it away into the emerging markets and the international arena. We think we're in the very early part of the first inning of a 9-inning game coming up here, and we look forward to see them continuing to outperform in the years ahead. Take care, and we wish you well.